When you hear the name CACI International, you probably think government contractor, and you wouldn't be wrong. But what if that's the old story? Today, we're going to look at CACI through an investor's eyes and ask if it's actually a tech powerhouse hiding in plain sight.
You know, government contractors are usually seen as these stable, predictable, let's be honest, kind of boring investments. But what happens when one of them decides to break the mold and become a high-growth tech company? That's the exact story we're diving into with CACI.
This is how CACI sees itself. And really, it's the core of this whole explainer. The key word here isn't national security, it's technology. In this world, that little distinction changes everything.
So here's the bottom line. For years, CACI has been on a mission. They've been intentionally shifting their business away from just providing expert services and moving towards selling their own high-margin technology. Let's break down how they've done it, if it's actually working, and what it all means for the stock.
Okay, first things first, let's look at the actual strategy. This move from expertise to technology wasn't some happy accident. It was a very deliberate multi-year plan.
So you can really boil the company's whole transformation down to these two models. On one side, you have expertise. This is where they provide skilled people for government projects. It's a solid business for sure, but it's hard to scale and you don't make a ton of profit on it. But on the other side, you have technology. This is them selling their own software and hardware. Now that is scalable, it's defensible, and for us as investors, the key is it brings in much, much higher profit margins.
And look, this isn't just some goal they're hoping to hit someday. It's already happened. The higher margin technology business has officially crossed the halfway point, and it now makes up over 54% of their revenue. That is real, tangible proof that this pivot is working.
So why should you care about all this? Because for an investor, this is where the magic happens. A business that makes more profit on every single dollar it brings in has the potential to grow its earnings way faster. This shift in the revenue mix is the engine that could drive the stock's value up and up over the long term.
A good story is one thing, but for any investor, the real proof, well, it's always in the numbers. So let's see if CACI's performance actually backs up their big strategy. First up, the backlog. CACI has $31.4 billion in contracts that they've already won and are just waiting to execute. I mean, just let that number sink in for a second. That's a huge pipeline that gives the company amazing visibility into its revenue for years to come. And investors absolutely love that kind of predictability.
Next, we've got the book-to-bill ratio, which is sitting at a really healthy 1.1x over the last 12 months. Now, this is a key metric in this industry, but it can sound a little jargony. So, what does it actually mean?
It's actually super simple. If the ratio is over 1, it means you're winning new business faster than you're finishing your old projects. So CACI's 1.1x is a crystal clear signal that its backlog, and by extension, its future revenue, is still growing. It's a fantastic sign. And that forward-looking growth, well, it's not just a theory. You can see it right here. It's led to this beautiful, consistent climb in revenue over the last 3 years. This is exactly the kind of chart you want to see from a company that says it's successfully executing a big strategic pivot.
Okay, so the strategy is working. The numbers look great. But how long can they keep it up? This is where we talk about what investors call a competitive moat. Basically, the barriers that protect a company from its rivals.
And in this industry, the moat is deep. You can't just wake up one day and decide to bid on these massive government contracts. You need decades of proven performance. You need a huge workforce of people who have high-level security clearances. And that alone takes years and years to build. And you need a ton of cash just to fund the bids. All of this keeps most new competition from even getting a foot in the door.
So the new guys are kept out. But what about the competition that's already in the game? The government contracting space is filled with huge, established players. Let's see how CACI compares to them. Now, you can scan across all these different numbers, but I want you to focus on one thing in particular, the P/E ratio. That's the price investors are willing to pay for a company's earnings. And notice how CACI's is, well, it's a lot higher than its peers. What does that tell us?
It tells us that the market is putting a premium price tag on CACI stock. Investors are basically shouting that they believe the company's tech-focused strategy is going to deliver faster growth in the future, and they are willing to pay more for it right now. It's a massive vote of confidence in this whole pivot we've been talking about.
All right, so the strategy's working, the numbers check out, and the market seems to agree. But we're investors, so we always have to ask, what's next? Let's talk about what could push this stock higher and, of course, the risks.
The biggest potential catalyst on the horizon is cash. A lot of cash. CACI is projecting a huge surge in its free cash flow to over $710 million by fiscal 2026. Think of this as the cash that's left over after running the entire business. It's the lifeblood of a company, and it gives management some serious firepower.
And they're not just going to sit on it. Management has a very clear playbook for what they're going to do with all that cash. They want to make smart acquisitions to buy new tech, they want to buy back their own stock, which makes every remaining share more valuable, and they want to pay down debt. All three of these are designed to do one thing: create more value for shareholders.
But of course, no investment is a sure thing. You have to know the risks. CACI's fate is still deeply tied to U.S. government budgets. The competition for both big contracts and top talent is incredibly fierce, and if they mess up one of their huge complex projects, it could seriously hurt their profits. These are the headwinds every investor has to keep an eye on.
So at the end of the day, it all boils down to this one central question. We've seen the successful tech pivot, we've seen the strong performance, and we can see that wave of cash about to come in. The big question for any investor is, can that powerful tech-driven growth engine continue to run faster than the built-in risks of relying on the government budget? That's the billion-dollar bet right there.